Welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. So let's go ahead and jump right in. Take a look at what we are going to be covering today. And as usually, we will go ahead and take a look at the broader markets, get a good feel for where we're standing following this week's sharp sell off. And then also some of the top headline news that really had an impact on this week's price action. From there, markets fall further. We will take a look beyond that as it relates to support and what to be on the lookout for going forward. Also, earnings as a driver for price action. And of course, those of you that follow the markets closely will know that we had some additional major mega cap stocks report this week. Their results were mixed, but the overall price action was not constructive. So we'll get into that as well. And there were some stocks that did buck this week's sell off, and I will share them with you. My focus, as usual, is going to be on these larger cap, more liquid, better known names. So I will get into that. Also, let's take a look at some of those headlines. This week, we did see yields rise again. We are into the fifth month of increases in yields and interest rates. So we're at that highest level in 3 years, actually, even a little bit more in 3 years, all with an anticipation and an eye toward rising interest rates, Federal Reserve's meeting taking place next month. Also, we did see the US dollar hit a 20-year high. It did pull back from that high. We'll take a look at that US dollar index. And all of that is amid global growth concerns, certainly with China's lockdown still very much in place and other areas that are struggling a bit. Germany seeing their highest record on record inflation levels, and then also that rising US interest rates in turn is pushing that dollar higher as foreign investors come into the US and purchase those bonds or notes that have those higher yields. Also, oil prices did rise last week, not dramatically, but it was an increase over Russia's supply disruption, continuing sanctions being put against them, and so forth. And then we talked about the FANG, those mega cap stocks. They did post mixed results. Again, we will go ahead and dig into that. Inflation did rise. We did get a report today. It was the PCE, a number very closely watched by the Federal Reserve. It did increase. However, there was talk that that core number had not increased. The most in the way of upside there. This is was due to the rise in gas prices for consumers. Consumer spending did increase recently, so that is something of note in the face of high inflation. So there is a lot more taking place as it relates to travel, leisure activities, and so forth. So from here, let's go ahead, take a look at those broader markets and see where we are. I will tell you I am recording this about 30 minutes prior to the close on today, Friday, but we can certainly get a very good feel. I did mark this chart up probably about an hour ago, and now my arrow is covering it because we have declined further going into the close. So let's just take a quick look. We've been following this for those of you that watch each and every week. Welcome back. And we are continuing to follow the progress with the broader markets. Quick look here at that RSI, that's your relative strength indicator. We're looking at a daily price chart of the S&P 500, continued declining on that RSI, continuing to trend lower as the broader markets continue to deteriorate. Another volatile period. We can see that up and down price action throughout the week, pockets of strength, but overall the trend is downward with weakness certainly taking place. Stochastics down here in negative territory. They are in what's called an oversold position down here below 30. Quite simply, it indicates that at some point we are on the lookout for a potential move out of this oversold position, but certainly nothing guaranteed in this broader market decline. Let's take a look at the first area of support here from my work. I'm looking at this February 25th low, which is at 4115. And at this juncture, prior to the close, we are at 4151. So just hanging on to trading above this potential area of support. Subscribers to my MEM Edge report will know what we are on the lookout for should we see a drop below this level. I'll continue to comment on that on this weekend's report as well when I have ample time to really dig in further as it relates to the broader markets. So from here, very quickly, I did want to let's go ahead and take a look at the S&P sectors and get a good feel for what is taking place beneath the surface as it relates to markets and price action. So we have a 2-month daily price chart view of the 11 S&P 500 sectors. I've gone ahead and sorted it by relative strength in descending order. We want to see relative outperformance, and as always, the S&P 500 is listed so that these sectors that are listed in front of the S&P 500 are relatively outperforming, and these areas and sectors to the right of the S&P 500 are deteriorating further than the S&P. So just as a rule of thumb here, what I did want to share with you are the areas that are up here in the forefront. We've seen a little bit of a shift. Staples stocks still up here front and center. They were up for the week. Let's just take a quick look and see if we are retaining that. I'm going to pull up the weekly here. And we are, in fact, now down 1%, but again, a relative outperformer. I will share some of the names there that are helping support the staples area. And then energy, we talked about oil prices on the rise. Uh, we'll see where we close with that segment as well, because we did have earnings reports. Two very significant companies came out with their numbers today. I'll share that with you as we progress here further. But of course, as always, you want to make sure you are not overweighted in these areas that are seeing further in the way of deterioration. So let's just take a look, because we want to be aware. This is another area I'm going to share some heavyweight earnings reports that came out this week, the industrial sector. And unfortunately, we're seeing very, very mixed results going into this week. The general theme was 80% of companies were coming in ahead of estimates. This week, much bumpier ride, certainly as it relates to maybe beating on earnings, but not on revenues. And then that all important management outlook going forward. So lots of unfortunate disappointments in that arena. But let's take a look, because XLC is the internet communication services. And of course, a lot of this is going to be Netflix down again this week. However, Facebook was up 13% going into this recording, and not quite enough to support the group. It remains in a downtrend, one of those first areas to peak in price back here in September. Google also down for the week. So from here, let's go ahead and take a look at some of those sub-industry groupings that go really beyond these sectors. They're going to drill down even further into the broader market's price action. And I'm going to go ahead and update this to make sure we are up to date. And as I go through these 2-month daily price charts, and I will pull some up further beyond that, you will get a sense of certainly what I'm focusing on in this currently highly volatile downtrending period in the markets. And first up is that US dollar. I talked about the fact that the dollar had pulled back from this spike high here in the dollar, but even so, it did pull back. Buyers are coming in. This dollar wants to trade higher, and the trickle effect is pretty evident as it relates to what's taking place in the broader market relative to this higher dollar. One backdrop or certainly anecdote to know as it relates to a rising dollar. Generally, the US stock market, under what I would only call normal price action, the US stock market would normally trade higher in a rising dollar environment, but we are not seeing that. And this week, I'm pulling up a weekly. This is that view as it relates to going back to certainly 2020. And I think I said 20 years. I did mean to say 2020 as it relates to this spike that we are seeing. It does take us back to this bear market period here in the S&P, or of course the broader markets during the beginning stages of the pandemic. So let's go ahead and move on from here. I did mention yields are on the rise. We did get a currently a pullback at the beginning of the week that then has turned into a reversal. So we are close to hitting this peak that we hit last week on yields. We are now at close to 2.9% on this 10-year yield. Another very impactful event as it relates to the move. Of course, growth stocks tending to weaken on that higher yield. And from here, one area that we don't want to see appear in the forefront, because again, I've added that relative strength indicator up here in the forefront from the ETFs that I've chosen. These are your relative outperformers and volatility back on the rise again. We did get a Monday drop down to 27, still quite elevated, but going into the close for the week, we are up here at 33 on that VIX, and certainly anything above 18 is pointing toward very much in the way of fear. It is also known as the fear index, high volatility, and we only need to take a quick look at the weekly to get historical precedent as it relates to when the volatility index spikes. This is taking us back to the beginning of February, and really we'd have to go back to the fall of 2020 when we did get that pullback here to note that higher volatility often translates into broader market weakness. So let's move on from here and take a look at some of these other areas. Again, it is all sorted by relative performance. And unfortunately, here at the lower right side, we do have the Nasdaq composite. So let's go ahead and pull up a weekly here. You'll see it's down 3.5% as we go into the close. It has broken below its February support. So I'm going to keep a close eye on the close, see what we get in the way of volume on this sell off and other characteristics to formulate a certainly a prognosis going forward over the near term. And one other area I can share with you very quickly is software, still bouncing around here at these lows. We got a little bit of a spike on Microsoft's earnings, but that has fizzled into certainly the close today. So from here, I was going to share with you a quick view of the S&P 500. This is another way that you can quite easily get your arms around what is taking place. Unfortunately, this week it's all going to skew in one direction given the sell-off and the weakness. We're looking here at a daily map of the S&P 500. The larger boxes are those companies that are the heaviest weight in the S&P 500, and the brighter the color, the lower the stock price has deteriorated to. And we can see that the majors, Apple, Microsoft, Amazon, Google, all down on the day. Not a whole lot of green here. Now that is the daily. From here, I am going to go ahead and pull up the weekly, and you'll see minimal pockets here of strength based on what has occurred throughout the week. And this is something I will get into further as we move on, because the green stocks by and large are companies that have reported earnings, have guided higher as it relates to going forward. That's where your any pockets of strength are taking place. It is all earnings related. So from here, I'm going to take a very brief break. When we get back, lots more to cover. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I am going to begin this segment by taking a look one other way that is very, very powerful as it relates to keeping abreast of what is currently taking place in the markets, where money flows are emanating toward or away from. And I do have these baskets of ETFs. And among them, I do have more recently, I've assembled a list of commodity related ETFs. So we are looking again at that 2 month daily price chart view, RSI, descending order. This is one area, certainly before today's late day sell off, there was certainly constructive price action in basic materials and other metals related stocks as well. So just take a look here at some of these areas that are holding up, and I think you'll understand quickly why they are. This is CORN, and it is a corn fund. And take a look at confirmed uptrend. You would not know what was going on in the broader markets. And of course, this is all about Russia invasion of Ukraine. And unfortunately, Russia has stepped up their pressure even further this week. Ukraine is a major exporter of corn and other grains. So we are seeing an uptick there as demand remains high, unfortunately, with reduced supply. Another area, and it's been a bit volatile, but very much generally an uptrend. This is natural gas, UNG. And we can see the spike here. This, of course, was the original as Russia invaded Ukraine. We did get a pullback from this spike price up here to 28, but we are coming back up. And this has everything to do with sanctions, with natural gas. Certainly, Europe being one of the primary importers from Russia, and Russia is taking action and has reduced their gas output to several select countries. So we are seeing a reinvigoration, if you will, of UNG. This is the U.S. Nat Gas Fund for those that are certainly looking for potential pockets of strength. One other area in this commodity space that we can take a look at is the DBE Energy Fund. And I did talk about those energy stocks, some of them on the uptick here, this fund in particular acting quite well. And then some of these other grains, soybean as well. We'll take a quick look here at the DBC Commodity Index, which is an overall index that peaked in price here following the invasion, pulled back, and then is seemingly regaining its uptrend as, again, unfortunately, pressures have been elevated with that war. So as we drill down, we can take a look at some of these areas that are underperforming. Silver, this is on news that demand has been reduced, certainly over the last 2 weeks. So we're seeing a pullback there for those of you that may have entered into that silver trade when it looked constructive. It is underperforming. And then also gold, surprisingly, that safe haven gold. This could be all about interest rates. Gold does not fare well generally in a rising rate environment. So I did want to share that view with you. And from here, let's go ahead. I mentioned some other areas that are withstanding the downward pressure taking place elsewhere. And I believe you'll share with me a theme, and I did actually talk about it when we were looking at that FinBiz view as it relates to those stocks that came in with numbers that were ahead of estimates, more importantly, guided higher. So we did have a couple of these large cap pharmaceutical stocks. This is Eli Lilly, LLY. They did report here on this gap up 63% year over year earnings growth. They did uh, revise their estimates higher. That's another critical component of stocks that are able to trade higher after results. And they're seeing great results from their obesity drug. So it's looking compelling. We can take a look at a couple of other large cap stocks that reported earnings that were above estimates. And unfortunately, McDonald's is giving back yesterday's gains on their results, 19% in the way of year over year earnings. They did see a nice boost in same store sales, but unfortunately, market pressures are overriding yesterday's gain. Take a quick look here at Merck. They did come out with numbers, and this certainly would be one of the most constructive names this week. A huge move higher on their news that their COVID pill had really high revenue. They did emerge out of this cup with handle base formation. It did hit 90, but unfortunately, market pressures did come through at the very end. Another top tier, or certainly well known stock that came out with strong numbers, and this is Hershey Foods, HSY. We can see this nice uptick on the news, but again, the market pressures, it closed down about 1%, certainly less than the broader markets. 32% year over year earnings growth, and they came in with numbers that were 20% above estimates. So we are seeing a theme here in the sense that it is it is defensive stocks that are showing growth in their sales, in their earnings, and then guiding higher. Let's take a look at one other name here that did come in with good numbers. 105% year over year growth. This is Reliance Steel and Aluminum RS. And this is yesterday's gaps up on the news. The stock trades at about 7 times their multiple, and they did come in about 18% above estimates. They offer a nice 1.8% yield. So from here, I'm going to share with you areas that did not fare well, that historically during difficult market periods, it is an area that can do well. However, their earnings report and outlook are not helping the cause here, and that is defense related stocks. So we can take a quick look here at Lockheed Martin. And this stock, you can see this big spike. You'll see this with the number of these defense stocks. They really moved higher when Russia first invaded Ukraine. There was a strong sense that we would see a pickup of already high spending as it relates to defense budgets globally. And unfortunately, a couple of things occurred when we had this spike. Let's go ahead and take a look at a weekly chart here. And you'll see that this move here was to near term highs. In other words, the stock, similar to others in defense, were pretty much priced for for perfection. Unlike had they been trading back here in this more normalized level prior to this spike, we may not have gotten this pretty sharp decline here. So Lockheed did come out with numbers that were mixed, and we can see this break now below this 50-day simple moving average. We already had negative momentum on the outside indicators. Another defense stock that they actually cut their revenue outlook, and this is pretty classic. This is L3 Harris Technologies, another big spike into March, and the stock deteriorating here. This candle is an outside bearish reversal candle, pretty big here. We can see it actually traded well above the high of its prior day, as well as below the low, and it is poised to trade down. It's down about 3%. So that is a bearish candle formation there. Take a look at one other name here, and that is Northrop Grumman, NOC. Very similar. Their earnings were above estimates. However, revenues were below. So we can see mixed results, and in many cases, guiding lower forward. So last up here is General Dynamics. They did come in with earnings above estimates, but sold off despite that. So I did want to share that with you. And then from here, I think we have a few more minutes left, and I can share with you some other stocks that did report earnings and subsequently traded higher. However, they did give back those gains today. So this is MasterCard MA. They had that big gap up, strong numbers, consumers traveling more, using their card. We talked about consumer spending increasing, and today we can see that MasterCard is down about 4.5%. And this is really indicative of where we are in the broader markets as it relates to stocks really selling off harshly if they miss. And if they have any kind of wobbly guidance, they are selling off. In more constructive market environments, investors shrug off that type of um, as far as relating to, they have excuses for the guidance lower and so forth, but really we are not in that kind of forgiving environment, unfortunately. So here we are with Procter and Gamble. They came out with strong numbers. You can see the big uptick yesterday, giving back most of that, but it is still finding support at that upward trending 10-day simple moving average. GSK is another large pharma, came out 32% year-over-year earnings growth, 10% above estimates, but struggling to remain above this shorter term 10-day simple moving average. And then from here, I can share another company that came out with earnings above estimates, but giving up their gains and then some. Really wasn't ready for prime time. Anyway, this is United Parcel, UPS, and it's really viewed as a bellwether company as it relates to increased revenues, implies increased, certainly consumer spending, increased corporate activity relating to needing to have items delivered. I'm going to get into what this impact here, because it's down 5% today, has had on broader markets. So, and individual stocks and groups as well. So if you haven't already, take a look. Use that link below. You can trial my MEM Edge report for 4 weeks for a very nominal fee. You'll want to be kept on top of this broader markets as well as any movement that we are seeing beneath the surface. I am going to leave it at that. Everyone, have a great weekend, and I look forward to seeing you here again next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.